suit.
Very good. Very good indeed. Right, so the next session is all looking at the rise of embedded insurance in a digital-first world. Insurers are seeking out new ways to get their existing products to market through different channels. They're also looking at different products and services with new channels to market. They're trying to meet the needs of the customer where the customer is at the defining points in their journey, be it point of sale or when they exceed a particular threshold. Insurers are increasingly talking about embedded insurance. So it gives me great pleasure to unpack the topic of embedded insurance with our great panel. Valentina, would you like to introduce yourself, please?
Absolutely. So my name is Valentina Smirnova, and I'm with AXA Partners. It feels like today is AXA Day. I've seen quite a few colleagues of mine from different AXA companies. I work for Finance World of Insurance, so it's head of finance operations. And I know a little bit about embedded insurance. Happy to share my knowledge and opinions.
Valentina, thank you very much. Welcome to the panel.
Cheers, thanks.
George, what's your name?
Well, you said it, so I won't cover that ground again. Pleasure to be here. I'm George. I lead Incubation Underwriting at Beazley. It's not a team name you'll hear very often. I think we're actually the only one at the moment to use that naming protocol. Essentially, our job is to try and do new stuff. So we try and launch new products that are new to the market. So our job is not trying to get into things that others do that we don't do yet. It's about trying to find the protection gap and exploit that protection gap and choose where we want to play. And our main kind of enemy is time. So basically, it's not about separating bad from good ideas. It's really hard separating good from great ideas. That's what kind of keeps us up at night. Our work falls into two main columns of activity. The first one is InsurTech. So we provide strategic advice on product and market fit. We provide sponsorship and through the cover holder process at Lloyd's. And ultimately, we bring the kind of fusty, boring insurance bit to the table and try and make the magic happen with partners that have passion for their chosen market. So that's InsurTech. The other bit is products that say Beazley on the tin and that we trade in a more traditional sense as underwriters, typically with brokers, typically intermediated products, larger ticket size and traded with commercial entities. So that's us.
Fantastic, George. Thank you very much. So, opening nice icebreaker question: what exactly is embedded insurance, and why is this becoming more and more important? Valentina.
Valentina. But that's okay. I'll accept that. So I think embedded insurance have been there for ages, and maybe just haven't been named that way. At least in the business that where we are, we partner a lot with other different companies, and the AXA Partners, comes from the name, sells quite a lot of embedded insurance. So you face it in your own life, like in your personal circumstances. Most likely you would have at least one or two insurance companies in your wallet with your credit cards. That's your typical embedded insurance. You probably didn't pay for that insurance. It's just part of the package that you get from your bank. I think it is an essential part of the market. And for insurance companies, it's a good part, but there are few icebergs in there. So the good bit is on the top, but not so good is probably under the water. That's my opinion.
Valentina, thank you very much.
That's okay.
George, what is your definition of embedded insurance, and why is it becoming more important?
Well, I think Valentina said it really well, but to sort of say the same thing in a slightly different way, I suppose it's about taking insurance products and sticking them into things that aren't insurance. So looking at people's experiences of different products and services and trying to get within the direction they're traveling with something that's going to try and alleviate some kind of pain. So you buy your plane tickets and you're going to get offered travel insurance at the same time. Great example, right? So you're stepping into the line they're already going down, which makes it easy for them to click on it because it's front of mind. So that, in my view, is kind of what we're talking about here. Why is it important? Well, it's growing massively. InsurTech London published a paper, great paper, recommend people read it, that said that the embedded market will be worth 700 billion odd in 2030, so sort of 5 to 7 times bigger than it is right now. So this is a massive opportunity, and essentially, I think we have a lot to learn from actors like AXA, but you could look towards insurance players like Ping An, right, the biggest embedded player in the world, and see what they're doing around how quickly they're launching apps and how close they're trying to get to people. And I think that's really interesting, right? Taking inspiration from different markets, particularly for Beazley as a strong London market player, looking abroad, looking towards the Asia Pac region as a kind of cradle for a lot of this innovation, and trying to work out what role we can play in it.
Fantastic, thank you. And so that sort of set the tone nicely for what embedded insurance is and why it's important. So what's happening in the kind of wider landscape that's changing? In ways that customers are becoming more digital, etc. Can we bring that to life? Maybe George, what's happening in the wider customer space that's driving this opportunity?
Well, I think maybe 5 years ago we would have spoken about demographics. We would have said, younger people want to interact digitally, and I think actually that's quite unfair now, because I think generally across demographics people expect a certain amount of digital interaction, and so digital environments can help to make the purchase of an embedded product easier, right? In line with what I was saying about, if an option is put in your way with the route of travel around buying a product or service you were already buying, then it becomes quite easy. A digital interface allows that to happen much faster than in the past, when you'd have a piece of paper and a person trying to sell you something, who knows, on the street or wherever else. Ultimately, I think the environment has changed, and that everyone expects a digital experience. I think that digital experience, or that digital mechanism, has provided a foundation for data, and the means of understanding data, are increasing all the time. You've got AI in a sort of hyperbolic sense, but really when you look at sort of machine learning and the ability to take different correlated or uncorrelated forms of data and make risk decisions, you've got some really simple but impactful products that can come about, because of that. And so all of these things, I think, are being stitched together. And I think the core reason that embedded insurance is so interesting is it's about alleviating pain and getting out of the way, fundamentally, right? You basically want to solve the problem for the person, and you don't want them to have to think about you again unless the thing you're insuring goes wrong. That's the ideal. And I think it was mentioned by someone earlier on, right? People generally don't want to interact with their insurer any more than they have to. In embedded, it's even more the case that that's important. If it becomes about you as an insurer and your brand and getting in their face, maybe it's something we can debate, but I think you start to lose some of the message.
Valentina, do you agree?
I think there are two types of embedded insurance. The one that you're choosing, all right? So you're paying your money, you're making your choice, you want it or you don't, and you can skip the step. And the one that you're given. So the bank card would be most likely the one that you're given. So the one that you're not choosing, the one that's already part of your Amex card or Visa card or MasterCard. I think both of them are equally important. I think from the insurance company perspective, the second one, the one where you pay money, are probably a little bit easier to deal with, especially in the digital world, in a way that you get quite clear data about your customers. On those embedded free, customer free, so to say, products, quite often you as insurer do not get access to your insured population. And that creates some issues on actually servicing them and predicting the frequency and all stuff like that. So it's not that black and white in some ways. Yeah.
Indeed.
But we spoke about this earlier on, nothing's really free. Right.
But true. I mean, somebody pays for it, but as a customer, it's free.
Yes, yeah.
So just on that point, that embedded insurance brings insurance products and services much closer to partners, to customers, and embedding in them in the customer journey. What's the impact of embedded insurance, therefore, on your own brand?
this is a question I'm going to struggle with, right? Because I feel like a little bit of I have to sort of bow down to Axe's more material experience in this space, because I'm at Beazley to do new stuff, and Embedded is pretty new to Beazley, right? Beazley is a commercial insurance player. We tackle stuff like cyber generally on a commercial basis around the world, right? So insofar as I'm looking at Embedded, it's about the protection gap. And so look, what does it mean for our brand? Well, it means diversification, but it also means relevance. Not that we're always hunting headlines, but it's about having having some kind of bet in an emerging space that's going to be very valuable. What the nature of that bet looks like, it remains to be seen. It would be acceptable for me to do nothing in Embedded if I didn't see the right opportunities. So you could argue that's quite a nice place to be. Ultimately, we will do something, but it'll have to be material value add, and it'll have to be something that people haven't seen before. Case in point, my colleague actually was here earlier on in the panel, Neil, and probably kind of spoke about Gaia then, so I'm going to bore you about it more because we're a captive audience. Gaia, for those of you that weren't listening or weren't here, is essentially an enterprise that offers financing for people doing IVF. The proposition is very straightforward from an embedded insurance perspective. When you do IVF, it may not succeed. The traditional approach is that you get left with a big bill and no baby. The insurance proposition is simple. If you don't have a baby as a result of your IVF, we wipe out your treatment fees. So it's really nice, right? 'Cause it's in the line of the customer journey, okay? And we selected that specifically because everybody said, and probably may continue to say, that it can't be done profitably, ethically, whatever else. Well, we've solved those problems, and part of that, or a big part of that, is down to the strength of Gaia as a business, and they're going to be a unicorn, by the way, so if you're in VC, you should check them out. But I think that's an example of what it means to Beazley. It's a quite selective process.
George, thank you for that. Coming to Valentina, from an AXA perspective, are you reducing your brand opportunities if you're embedding your products with other people's services?
Well, it depends, right? There is no one answer to this question. So coming back to what I was saying before, the package insurance normally doesn't have a name on it. I mean, insurance company name on it. So if you take a card, you don't know who is behind it. What's the insurance company providing you with a travel cover or your home content cover or whatever else? It would be a Visa, whatever bank, insurance type of thing, which doesn't exist. It would be some insurance behind it. On the embedded that you pay for, you normally see the name, so that's no problem in it. I think AXA, I believe, AXA chose quite a specific way on it. AXA is a big federation of companies. AXA Partners is a specific entity built specifically for those things. So we kind of don't mind that we're not that seen because we have other products with other companies that are seen. Okay.
So AXA is big enough to not necessarily have that as a big concern. What would you say to a medium-sized or a smaller insurer that's effectively sort of embedding its products, so it's getting its products out to market, but not branded as them?
I think it's a question of choice, of course, and also what do you mean by brand and reputation? Is it reputation within common populace? If you're embedding it invisibly, you don't really care about that. You care about your reputation with your travel agents, with your airlines, with your whomever is packaging the product. And as long as you are able to market it properly, you're okay. Sure, if your choice is to do both, to do the end user sale as well as the packaging with other product handlers, then you're in trouble. So you need to do both equally good. Yeah.
Super. We've had a question come through on the app. Could non-insurers embedding insurance products into their offerings push traditional insurers out of the market? Or could we see greater collaboration? Great question. George?
Yeah, well, to use the example I just used, Gaia, right? Non-insurance entity wanting to put insurance as part of their experience and are doing that successfully. I think you've got to look at the motivations though, right? So the problem with insurance is it's really hard and you have to pay claims, which is annoying. And I think a lot of InsurTechs particularly, they come in with a lot to learn on that front, and then when they realise how much pain goes into running products and reserving and everything else, they quite quickly realise that actually it's quite nice to be able to sit in the middle not to have to deal with the claims yourself, typically in an embedded sense, right? Because you use a TPA or some other format to pay the claims. And they get to take risk-free percentage off the top of the premium, so they can concentrate doing what they do best. And the insurance volume, follows that if it's attractive enough. And that's a great place to be. So if you can take 10 to 20% of the premium volume without having to pay the claims yourself off your balance sheet, then that's great. That's a pretty nice cash generative line of business to
Valentina, do you agree?
Absolutely, but I think this conversation about non-insurers coming into insurance market has been there for at least 5 to 7 years that I can recall. And the biggest threat, so to say, Amazon, everybody referring to Amazon. And from what I understand, they are starting quite successfully but slowly in this area. And maybe that would be a death of some sort to the P&C market of individual policy sale. I don't know. But I mean, the biggest differentiator for me between your typical big insurance company and Amazon, we are very different in our DNAs. I mean, we all come from insurance market, right? So we normally wouldn't have a huge, humongous R&D's budgets. We would not be welcoming 90% of failure on the projects, right? So that's normal. Amazon DNA is completely different. They will be welcoming failure on the projects. They will probably fire that person, but they'll hire someone else. But still, it's okay for them. It's completely different culture. They would be quicker in finding right solution on how to make it a very attractable to the customers, and their customer service, I think it's excellent. So
one can argue they're
very difficult to beat. I mean, it's not that great, but it's quick.
I'm just cynical about it, Valentina, because look, if I was to advise Amazon, I'd say just don't bother, right? Don't become an insurer. Because let me give you an example, an obvious example if you go through the maths. A successful insurance product, any type of successful insurance product runs at under 100% combined ratio, right? It means you're saving some money off the back of all your costs, right? You're just there. 99%, right? That can be a good result in the market. So you're looking at maybe a 1% margin up to a 10% margin. If you're looking at an entity like Amazon, which basically is an intermediary, right? A giant one, it could buy every insurer in London based on current market cap many times over. If you look at their role, their opportunity is saying, well, we're going to take as much of the pie as we want, and we're going to get someone else to pay the claims because we can. That's an infinitely better model for generating money than being the insurer.
I agree, and that's probably why they're not in that market.
Right.
I mean,
because on some products we make less money than our intermediary when you take all of their costs into account, right? Which is often a struggle for the intermediary to understand.
But I think this question of are they coming into this market, whether it's health or travel or home or auto, would be there until they formally declare we are not going there, and still people won't believe in it. Yeah. So
indeed.
And to be clear, I'm saying they are coming, right? I'm not saying that Amazon isn't interested, or others aren't interested. Look at Tesla, right, with their motor product. That seems to be very successful, right? But what I am saying is they're not just coming arbitrarily to take insurers' lunch, because it might not actually be that attractive. It might not be that tasty. There might be an alternative that you can get that is better.
Dear panel, there's a person there bursting with a question.
You give me a really very surprising moment with your statement that you're not worried about embedded insurance companies coming in. Well, you're sitting up there with AXA, and then there is Ping An, almost bigger in their earned insurance premium on an annual basis. And if anything is embedded, then Ping An is the embedded insurance company. Almost got bigger within 10 years than AXA.
Absolutely.
On a global basis. So they are not coming; they are here.
Interesting.
Well, I'm not saying that we're not worried. I'm saying that there is very little that we can do about it, to some extent. Okay, that's a fact of life. So they are coming. We are changing. I mean, I was just referring to the, well-known, well talked through threat of Amazon. Okay, and I think they are not really coming massively. Okay, they will be coming in niche markets, in countries, in the niche products or whatever else, unless they decide to take over insurance business. But they can, okay, so, and then probably it will all change. I think there is no 100% accurate answer to any question, really. if you remember when the lockdown started, 2020, so I think that the funniest thing I ever heard was in 2015, the typical question on interview would be, where do you see yourself in 5 years' time? So did somebody answer, I see myself sitting at home in front of my computer? No. So that means 100% of answers were incorrect. So I think we have very little control over what's coming in 5 years' time. We can influence, we can build up around it, but prediction, maybe some genius people who can do predictions. I'm not one of them.
So Valentina, Valentina, thank you very much. I want to move on because we've got some more questions coming in, and also to your point, if we did have a crystal ball that was accurate, we'll all be very rich. I don't think we are, but well, maybe Ping An will be. Who knows? But great question. Thank you. So I've got a question here. How does embedded insurance affect consumers? On one hand, for example, it provides high level of convenience, but on the other, could coverage be less adequate if it is being provided by a non-insurer, and hence less experienced? Good question.
Well, I think we shouldn't be treating embedded insurance as the thing provided by non-insurer, because behind it, it's insurer who is just pushing the insurance product through the non-insurance channels.
So your question's wrong. Just saying, just call it out, your question's...
If you take UK, we would be highly regulated on the fairness of the product, on the coverage limits provided and all stuff like that. So in that sense, whether you get your travel insurance through your credit card that you never knew about, you got any travel insurance, or you buy it yourself, as a minimum coverage, you will be well protected. Sure, if you pay additional premium, you will probably get bigger limits and maybe more generous lost luggage allowance or anything like that. But a base level is quite generous anyways.
Okay,
yeah.
cool. So can I just... You want a question, do you?
I do have a question.
Go on then.
When we're talking about embedded insurance, we're talking about personal customers a lot. Is there an application in the commercial space?
Great question.
I don't know.
So the answer is yes.
The answer is yes. I think.
Someone else can answer that?
Sorry.
So for example, for SMEs, often they buy their insurance annually, and then they kind of hope that their turnover doesn't exceed, or the number of employees don't exceed a certain threshold, or it invalidates their claim, their insurance coverage. So if an example of embedded insurance might be using Sage and counting platforms like Sage or Xero or the like to automatically increase levels of cover, or indeed if you an SME can buy insurance for a single invoice that they think is going to be paid late or not paid. So credit insurance against one, and it might cost them 5 pence. So the cost of transacting it must be really, really low. But actually, for me, I might go, yeah, I'm going to buy that insurance for just that one invoice because it might not be paid. Just 2 examples.
So just on that, so I agree with what you said. I think as the ticket price increases, it gets harder for insurers to give away control to a partner that's selling insurance into some kind of journey of a company. But there are some good examples, within cyber insurance, for example. French InsurTech I was talking to last year called Stoic is doing some really interesting partnerships with telecom companies where essentially they're putting their cyber product alongside what a business would normally buy around, whether they're buying broadband or some other kind of business service. I kind of like that because it makes sense, right? You've got some good data that you can bring into play there. But I think the action is probably more in the personal space, but that doesn't mean at all that the SME space to come next won't be the next kind of dynamic in play, because there are some similarities between how people buy insurance and how SMEs buy insurance. Time poor, relatively disinterested in anything outside of the obligatory classes. Those types of dynamics speak to, if you've got data, you can try and take away some of that risk and it becomes okay. There's always going to be part of the market, though, where it's extremely hard. So your large cap companies, right, are probably not going to be buying a solution via something they didn't expect to be buying it via. It's going to be a broker-led conversation or some kind of sophisticated conversation. But this is an unsaturated marketplace, so there's an awful lot of opportunity out there. You just got to choose your distribution mechanism, choose your target demographic and the motivators, and then go after it. The point I was going to make earlier on non-insurance companies coming for our lunch or whatever is, you can't just go out and offer insurance if you're not an insurance entity. You have to find capacity. So to your point, there's always an insurer lurking in the background, right, doing the diligence on whether it makes sense or whatever else. So also the point around being worried about Ping An, I don't work for AXA, so I'm just going to if I would say your situational intelligence on competitors becomes a lot more acute when you're in a saturated marketplace. If you're going over the next 10 years from 100 billion to 700 billion as a market, there is an awful lot of opportunity to get at. So I'm not saying you don't worry about the competition. I'm just saying that if you spend too much time staring over your shoulder, you're not going to be looking ahead enough. And ultimately, there's probably enough to go around before you get to that saturation point where you can start thinking about real acute competitive differences that might be more subtle.
Great. We've got 50 minutes left, so I want to move the conversation on. Who remembers the sort of hype around blockchain a few years ago? Yeah, lots of nods. Is it possible, what do you think, is the hype around embedded insurance similar to the hype around blockchain that was a few years ago? There's a lady shaking her head at the back. Hello. Okay, great participation. I love it.
Yeah, I agree with you. The answer's no.
Okay. Would you like to explain?
I would like
Why?
to expand. I think the connotation of the question is, does insurance fall in love with faddy trends that then become absorbed or become irrelevant? And I don't think either of these things are those. Now, there are some situations in which the kind of, I guess, the white horses on the wave of innovation tend to be a bit foamy and a bit frothy, and everyone gets very excited, but the practical application is really hard. Blockchain is an example of that. However, I would point out that blockchain is central to the crypto asset industry, which is growing massively. It is a topic that insurers, I'm going to say this unequivocally, have to get into and have to look at and be relevant for. So if anything, blockchain is developing very quickly into a new force, a new industry. So we have to take that very seriously. So both embedded insurance products and blockchain, these aren't in some way competing facets, which I know you weren't saying, but they're both incredibly relevant, becoming more relevant. They're not
So both not hype?
They're not hype, no.
Valentina, do you agree or not?
I think it's a buzzword, okay? So, and it's okay. It doesn't mean that it's non-existent. It doesn't mean that it's fake. It doesn't mean that it doesn't have a future. It just means that at this period of time, this particular concept is super popular, okay? So, and that's fine. I mean, blockchain is there. They're developing. It's just not that hype anymore, not being talked through, okay? It doesn't mean that they died or they've been wrong or something. If embedded insurance is a hype word now, great, okay? So it doesn't hurt embedded insurance. It was there before, it is there now, and it will be there sometime as well. So hype is fine.
Fine, it's fine. Brilliant. We've had a question come in. I have seen embedded insurance fraudulently targeted. Do you see the market taking some time to catch up in detecting this organised behaviour? Good question.
I'm so sorry, I don't have a sensible answer to that question.
Thank you for your honesty.
Well, I think embedded insurance is not much different to any other insurance in that respect. So there is always possibility for a fraud, and there are always people who are working in anti-fraud department. So the new concept comes how to fraud someone, the new concept comes how to anti-fraud against that. I think we are at that stage as a society altogether that there is no longer any hidden things in there. So what was previously not that widely known, like your credit card having insurance, now it's a little bit more understanding. So the fraudsters, same people, so they understand better about how the credit card package is built, so they understand there is insurance behind it. There is an opportunity to fraud. So it is fraud in there, and there are anti-fraud departments. So
Superb, thank you. So next question, ecosystems, a word often mentioned. Digitalisation has spawned new digital ecosystems orchestrated by powerful platform businesses McKinsey estimates 30% of global economic activity, $60 trillion, will be mediated within these new ecosystems by 2025. How is the shift towards embedded insurance affecting the traditional insurance models? Valentina.
Well, I think ecosystems is fine. I'm not too sure whether 25 kind of threshold would be a realistic one. I mean, I think we could all agree on one thing at least. So insurance companies are very conservative, and we have a lot of legacies, and we don't like risk, we don't like change. So to get to the ecosystem level for the big company, you need to decommission a lot of legacies. You need to connect a lot of pieces together. And I'm just not too sure that 25 is a reachable horizon, I would say. Yeah, it's needed, and embedded insurance is extremely difficult if you don't have ecosystem, actually serving all the angles of those triangles and rectangles and whatever other.
Valentina, but when it does happen,
yeah.
What do you see as the impact on traditional insurance models?
Okay, what then you call traditional insurance model then?
What we do now.
Okay, we do now quite a lot of ecosystems. So, I mean, I think it's all sits in definition. Okay, to me, the ecosystem for embedded insurance is a digital connection of all partners, of all parties, kind of playing in that space. If we would call traditional insurance is when you write down policy on the piece of paper and then write down, premium on another piece of paper and submit it by fax, doesn't exist, okay, by scan and email, then yes, they are very different. But luckily, I think there are not too many insurance companies that are basing their business on that traditional kind of...
Got it.
Even in countries like France and Spain, which they love their paper. Yeah.
I think it's a question that consultancies would love, because you could write some interesting papers on ecosystems. But I think from a practitioner perspective, exactly as you say, we exist in ecosystems right now. They might be different ecosystems to the ones that exist in years to come, 5 years, 10 years, 50 years, whatever metric you want to use. There are new parties emerging all the time, new redundancies, new mouths in the chain to feed, or you could argue there's some kind of compounding of the value chain as we weed out, I guess, leakage against a pound of insurance premium. We are, as an industry, making an effort to make that process more efficient. And yeah, look, I think there are going to be a few winners. I think what is interesting and maybe mildly dystopian is the idea that tech companies, we've spoken a bit about Amazon, that they might own a lot more of our future than they currently do. So you might get Amazon Home Insurance, you might have an Amazon Bank, you might have an Amazon Mortgage, and I think that as owning the whole ecosystem, I think that's a really interesting play. And so I suppose you might end up with a kind of, a number of super ecosystems that compete with each other. And then the question is, well, where does everyone fit in within that world, and how do you compete? But we are in ecosystems right now, right?
Yeah. Super. And gentleman there with a question.
Talking about ecosystems, I'm surprised we've got this far in a conversation about. I'm surprised we got this far in a conversation about embedded insurance without talking about Tesla and Mercedes and their recent claims or statements that they will insure their automated vehicles themselves. And I wonder whether this hybrid insurance, extended warranty, if you want to call it that, and the data that those organisations will have, both Mercedes on their vehicles and Tesla on theirs, but it could apply to a home builder that wants to build in a floodplain, for example, or it could apply to a construction company that's building a dam or is building an office block, and them indemnifying the businesses. Is that a threat to the incumbent insurance industry?
Great question, George.
Yeah, look, I think if you look at what's going on with Tesla, right, they've got a situation in which they have a novel technology without much lost data behind it. And so insurers initially freak out at that kind of thing and say, no, it doesn't compute, right? Computer says no. And so is Tesla, which is an increasingly cash-generative business with a good balance sheet. You say, well, guess what? If you're not going to play, we're going to do it ourselves. Now, will Tesla still be doing insurance in 10 years or 20 years? Well, it depends. If the insurance market is caught up and can do something more competitive and allows them to free up that balance sheet, then they'll do that, right? So some of this stuff might be, bearing in mind that Tesla is not doing insurance because they think they can make money out of insurance. They're doing insurance because they sell cars and it adds to the experience. If you can weed out that component, because Elon Musk, he came to the insurance market, right? He said, help me out. The insurance market came short of his expectations. So in common with everything else he's done with every industry, he said, well, I can do it better and I'll build it myself.
Not threatening yourself, though.
It is, yeah, in terms of relevance.
From the vehicles, and he has the courage and the bank balance.
Yeah.
So he has the data in the
He has
vehicles,
Twitter.
which he's never going to release to insurers, and he has the courage and the bank balance to actually say, I don't care. I don't care. And I don't care if I
fair
lose.
enough.
But what's the motivation? He's not an insurance person. He doesn't care. This is a commodity to him, right?
Because he's putting the customer at the centre of his journey, which insurers
Right.
are traditionally, at least.
Yes. What I'm saying is if Tesla designs the product and it works really well and you switch out the capital later on because it's better for Tesla, then he'll definitely do that, right? This is a mercantile decision. He'll say, well, actually, now that you're interested, we got the headlines, we created the product, so we're in control of that. But if you want to slide your capital in behind us on a reinsurance basis or whatever, then they'll definitely start to do that, right? Because his motivation is not to be an insurance company. His motivation is not to retain this risk. That's not why this came about. So they are in this space as a product of industry not moving fast enough to keep up with what they required because of the lack of data and the scale of what they're trying to do.
100% agree. And I'm using
So last question.
I'm using motor as the example because it's so topical, I guess, with Mercedes coming out as well. But with Tesla and Mercedes both saying we're going to back our own vehicles, the chances are their competitors are going to follow suit. The BMW, the Audi, VW Group are all going to follow suit. And is that embedded insurance, or is that an extended warranty? And is an extended warranty insurance in the first place? I mean,
Yeah, I mean,
words and definition. But I'm just going to. We've got a few more topics to get through, if that's okay. Unless you particularly wanted to.
or we could keep talking about this all the time.
Maybe you guys hook up after after
exactly.
a drink, because
We can shout at each other for another hour. Yeah.
fantastic. Very passionate topic, this embedded insurance. But also I've heard some people talk about embedded insurance as being invisible. What do you see as the disadvantages of that, particularly from a regulatory and PPI kind of examples from the past? Valentina.
Well, they are invisible to a certain extent, but they are still regulated how invisible or not invisible they are. I think we have all learned our lessons on PPI examples, so we shouldn't be falling into the same, problem second time around massively. It is invisible in the sense that it's not promoted that much, but it is visible to someone who wants to know about it. So I think the insurance market, especially in UK, is quite strongly regulated. And it's also a protection to insurance companies to some extent, because while it's a pain to provide all this information to your customers in a certain format, in a certain font or whatever else, it actually protects you as insurance from the same topic as PPI had. So it's good, and it's relatively safe, I think, not to fall into PPI, pathway.
Fantastic. So we've understood that the customer's world is changing through digitalisation. We've understood that there are leading examples of embedded insurance and the pros and cons of doing that. Let's move on to the sort of challenges. If there was an organisation out here that wanted to kind of start to explore embedded insurance as a way forward, what will be the kind of challenges that they'll face, and how they could overcome them? Maybe George first.
Yeah. Look, I think I'd start with the people. Whenever I look at a partner, it's always about the people and the problem. So why are these people good partners? What do they bring to the table in terms of special knowledge or intelligence or aptitude for the issue, and then their understanding of the economics of the problem, that the purchaser's mindset, I think, is the second core attribute that I would look for. So, an entity that comes to me, certainly bearing in mind who I work for, and says, well, we're interested in doing embedded motor, I'm probably not going to find that interesting. But if you come to me and say, look, here's an industry that's growing massively and here's a problem that no product solves, but I think insurance could do it, great, we're going to have a conversation about that. And you don't need to know about insurance, but if you have passion for your industry, then yeah, great, we're on to stage 2. So yeah,
key challenge, finding the right partners.
Simplistically, yeah, people, product, people, problem, start with that and then go from there.
Fantastic. Valentina.
I think if we, again, coming back to embedded insurance, the invisible so-called and the visibles one, I think in the visible segment, it's not much of a danger. So it's kind of an accelerator to your sales. You associate yourself with something else, with another product. You just need to build it up, being suitable for the problems, for the pain points, whatever. But it's just a channel of distribution. On invisible, and you have all the benefits. You get the database, who are your customers, where they're going to, what they're doing, and stuff like that. On invisible front, when it's a packaged firmly with something else, normally it comes with a great disadvantage. You don't know who are your end customers at any given point of time, and it gives the risk of low predictability. How often they will be coming to you back for service, how often they will be having claims, how big the claims would be. You take your typical, travel market, and coming back again to the credit cards. So we had this lockdown, right? Nobody traveled anywhere. The insurance companies with embedded travel products in credit card got their money back, right? So nobody was claiming anything. But as no government was saying the lockdown is only for 2 weeks, 2 months, 2 years, whatever. So the insurance companies had to keep on the books their agents to be ready to receive calls. And that is the spend that they incurred. If they had any idea of predictability, if they had any idea who bought tickets, who is those Joes and Marys who got their insurance, did they actually intend to travel, then they can reduce their cost. You can't do it with invisible packaging insurance. You can put some forecasting in place, but with big things like lockdowns and epidemics and whatever else, those forecasts, irrelevant. I mean, the recent one, okay, but the old one, irrelevant.
Fantastic. Thank you very much. So we've just a few minutes to go, and the networking drinks, I can hear it chinking out there. One's got my name on. So looking at, to kind of wrap this up then, so if there was an insurance company out there wanting to kind of embark on this, what would be the one golden nugget of advice that you would give them? Perhaps Valentina first.
I'm afraid I'm not good with advices, so I don't think that I'm smarter than anyone else. And I think people are smart enough to find their own solutions. There are a lot of studies, cases, whatever online. I think it comes with experience, and experience is personal in some ways.
Fantastic.
Sorry.
No, very honest answer. Thank you very much.
I'm not as humble than you. I think I am cleverer than a lot of people, so I'm going to give some advice.
Good. They're expecting some advice, so I'm really pleased.
Just because you can do something doesn't mean you should. That would be my advice.
Ooh, what do you mean by that?
Just because a product is tenable and works mechanically and you think someone might buy it doesn't mean that it's the right thing to do versus other opportunities. I think people get so excited by the data stacking up in the way they thought it was going to, and we get into this insurance microcosm where we kind of nerd out and we're like, wow, this is so cool. My big fear is...
You're going to say hype in a minute, aren't you?
Yeah, I was going to, but my big fear is basically us collectively coming up with really cool insurance products that no one wants to buy. That's, basically the fear.
And that's why we're not progressive as quick as any banking sector or anything like that. That's why insurance is a little bit behind. So
it's a complex business.
Risk averse.
Very complex business.
That's true.
Thank you. Any remaining questions before we bring it to a close? Hello.
Yes, just have a quick question. I know we had a lot of talk about embedded insurance against traditional products that we buy. Maybe I'm not understanding it well, but in my understanding, embedded insurance is something that is embedded into a product or a service that we buy, and which is very customer focused, depending on my needs or customer needs. So for example, if I buy a bicycle and insurance is embedded into it, I just buy the insurance for my bicycle only. So maybe my needs are different. Maybe I want content insurance, which covers all of the content in my house. So how does it, I think there's market for both. I mean, I don't know
Absolutely.
how you feel about it.
Very good. Great question. What do we think?
Well, with 41 seconds to go, we should have had you up here, right? You would have made much more sense than I did. Yeah, look, I think it's just about the journey that you're trying to insert yourself into, right? The journey of someone buying a bicycle and being worried about bicycle risk is very different to the one when you're thinking about your home. Now, you might catch them at the right point where they go, oh, wow, you've also got home insurance, you've also got ABC, and you buy them all, that's great. But it's much harder to step outside of that journey and sell them something that's uncorrelated. So, yeah, I think it's all just about understanding people's lives and understanding the journeys they're going through and getting as close as possible to it and making it as easy to purchase as possible. And then, as I said, just getting out of the way. Just saying, okay, you know what, your policy documents are there if you need them, you know who to contact, that's it, that's the end of your interaction. That's on the very basic consumer side of things, right? As you go up the chain towards SMEs and businesses, they need a different type of interaction. They might want more contact because they want services and things, but it's a hard question to answer because there's so many different risks and so many different types of buyers.
I think they're not really in competition to some extent. And I think, again, coming back to the point, it's very difficult to predict. But my personal observation that society is getting lazier and lazier, okay? The lazier we get, the more embedded things needed. So it means I'm lazy to go one step further and to look for insurance, right? So as insurance company, then it would be in my interest to make it easy and to embed it somewhere. So if we get to complete laziness scenario, then everything should be embedded. Otherwise, we won't sell policies. Yeah.
Fantastic. Thank you very much for that question. Brilliant. Thank you very much for listening to that. Thank you to the panellists, Valentina and George. Thank you so much. Great topic. Yes, not hype. It's happening now already. I think we can go in for a drink now. So I think back to you. Thank you very much.